Monday morning, folks, and welcome to a brand new episode of FinMet Mondays. Joining me is Mr. Sunil Kashyap, as always. Sunil, gold had quite a mixed outlook last week, and it was quite roller coaster. I think there were a lot of interesting technical signals that we were able to gauge from the price action as well. Let's get right into it, and let me show you what I was able to find. The first thing was this long green candle, which we saw on Thursday, the 15th of June, right? We saw the price action hit this support, this green line that we see here, which is around the 1936 level. And I couldn't have positioned this support any more accurately. You see this bounce right back off, and you saw a barrage of bargain buyers and just bulls supporting the metal around these levels and bringing it right back up. So this is very telling as to where the immediate support for gold lies and where we would actually see gold retest come, let's say, a hotter inflation reading in the coming weeks as well. The second interesting thing I also figured was this black line, which is actually the 100-day moving average. If you've seen the general trend for gold around November, when we were around the 1600 and 1650 levels, it is after that when we made a move above this black line that gold has remained in a continuous uptrend. And there was a time when we returned back to it, but we again saw a bounce back soon after. It's interesting because now we've again come back to this level, and you see that there are buyers who are kind of using this as a technical support to keep gold elevated until we get more clarity from the Fed. So this was the second interesting thing from a technical price point. And the third thing is, again, this trend line that we have from November year. So this was the same 1600, 1650 levels that we had hit last November. And if we draw a trend line from this double bottom region all the way to the current price action levels that we are at, we also see that there's a convergence of this trend line with this moving average that we have here, and where we also saw gold bounce back off. So there's a confluence of multiple trend lines and signals that are definitely painting the same story, which is you have strong support at these 1930 levels. Can you throw some color as to probably what, from on the ground, is it the institutional investors? Are they the central banks? Where do you think this support is coming from, and what is underpinning the support from a fundamental standpoint?
Yeah, there's a couple of levels of actually three different factors of buyers that we're seeing. One is obviously physical buyers. Demand in Asia as we get into the season now has been solid. Premiums, for example, in Shanghai are $6, $7. Premiums in India are also $4, $5. So premiums generally are strong. There's also retail buying taking place from the US in terms of coins and also from Europe. So there's retail demand is positive. We're seeing central banks coming out and saying that they're buying gold as a part of their overall reserve diversification strategy. And lastly, there are lots of institutional long-only funds who are looking at diversifying their holdings away from equities and bonds and getting into gold also. So all these three segments of demand really underpin the technical support that you talked about.
Interesting, interesting. And what did you make of the Fed's, monetary policy outlook? I think the general consensus or understanding from the market is that they understood nothing, and there was nothing helpful that came out of that. But do you have a different take, or was this something that you were able to gather?
Yeah, for me, I think the big take was that this is the first time the Fed categorically said that don't expect us to reduce rates in a hurry.
Hmm.
We're going to keep rates higher. And in fact, we're pausing, but that doesn't mean we wouldn't increase in the future. I
Hmm.
think that signal was very clear, loud and clear. So there were several people, maybe 30, 40% of the market, who was expecting a decline in interest rates by the end of this year. I don't think that's going to happen, and the Fed clearly signaled that.
Thank you so much. Thank you so much for joining me, and we will see you next week.